Hello and welcome to the November lamb market update. Today I'm going to talk you through the key trends in the UK lamb sector over the past few months and how these developments have compared to our forecasts that we made in July. In the July forecast, we anticipated that the UK lamb slaughter for 2020 overall would fall by 4% from last year to stand at about 12.6 million head. This was largely due to low slaughter levels recorded for Q2 at the time. Volumes in the second half of 2020 were expected to be similar to 2019, reflecting the fact we'd estimated a similar crop to last year. In fact, slaughter has been higher than we expected, and for January to September was less than 1% down on the year. Revisions to previously published slaughter numbers mean that the 2019 lamb crop was probably larger than we previously estimated. This also increases the estimate for the 2020 crop, as we still think that this year's crop is probably similar to last year's. Also, it seems that lambs have been coming forward for slaughter earlier than usual. It's not surprising that lambs have been presented earlier than normal this year, encouraged by higher prices and uncertainty over trading conditions with the EU next year. In the July forecast, imports were forecast to decline by 17% this year, driven by tight production in New Zealand and Australia, as well as ongoing strong Chinese demand. The HMRC data shows that imports have fallen by 12% in the year to August. The decline has not been quite as large as expected, with imports in recent months more similar to year-earlier levels. Lamb prices in the Southern Hemisphere have been under pressure this year, with COVID-19 particularly disrupting demand for high-value exports destined for global food service markets. Increased price competitiveness is probably supporting import levels. Exports are typically reflective of domestic production levels. In July, we anticipated a 16% decline in exports this year. For the year to August, HMRC data shows that sheep exports were only 7% less than a year earlier. Considering that production has been higher than our previous forecasts, it's not surprising that exports have also been higher than forecast. So what does all this mean for the coming months? Well, with farm gate prices still high and Brexit uncertainty ongoing, lambs may well continue to come forward earlier than usual. This would mean lamb slaughter remains above forecast for the remainder of 2020. At higher levels than in 2019. The larger lamb crop estimate also means that slaughter could be higher than forecast in early 2021, although this will depend on the extent to which lambs are marketed late this year. If production does continue to run higher, then there is the potential for exports to do the same. Uncertainty over trading relations in the EU after January might also prompt some stockpiling on the continent. On the other hand, the COVID-19 pandemic presents a significant downside risk, with ongoing restrictions potentially limited European demand. On the import side, the increased price competitiveness of imported product may mean that volumes remain ahead of the forecast in the coming months. However, demand levels in the UK may also influence this trend. Demand growth is expected to ease towards the end of 2020 due to the likelihood of increasing economic pressures as we continue to face challenges stemming from the COVID-19 pandemic. We'll be reviewing our forecasts in the new year. In the meantime, check out our website for regular news updates on lamb markets. Thank you.